Over the last couple of weeks, we've had some weakness with some specific stocks and specific sectors. Of course, last week we've had some very red days. So I've picked out 4 strong companies where if you look at the graph, some of them are already oversold. The others are quite close to being oversold. So maybe this might be a buy the dip opportunity, or at least a put it on the watch list opportunity. So the stock number 1 I want to start with is Mercadolibre, one of my favorite companies that I own in my portfolio. If you've been following the channel for a while, you know that I recently sold Nu, although I'm still a huge fan of the company. I bought Nu at around $4, stock went up extremely fast, faster than expected, and I took the opportunity to add to Mercadolibre with that position. So if you look at Mercadolibre right now, this is on the daily. RSI is pretty low. But what we can see right now is that the stock broke under the 200-day moving average. Of course, if we zoom out a little bit, we can see that back here in November 2023, we have a gap. That gap, if we want to close it, that's going to be closer to $1,380. If we reach that, I do think we're going to be oversold. So this is stock number 1 you should be keeping an eye on. It's one that I'm keeping an eye on very closely. Will have to drop a bit more for me to add more to my position because it is already 10% of my portfolio. And valuation wise, we're actually looking extremely attractive right now on the forward PE, EV to EBITDA, price to sales, much cheaper than the 5-year mean. The company has grown its business in the last couple of years, yet we are under its all-time highs, which means you're getting the company at a cheaper price today, valuation wise. If you look at the other metrics here, price to free cash flow in the last 12 months, only 15.8 times, and a price earnings to growth ratio of 1.47. So in my opinion, even right now, very attractive for this dominant company. If we look at the average analyst price target, I was actually surprised at seeing that number so high. It's at $1,936, representing 34% upside from the price we're at today. If you're asking why, well, you only have to look at the analyst estimates for the coming fiscal years. Top and bottom line, I mean, huge growth. Top line growing over 20% for the next coming fiscal years. EPS growth for fiscal year 2024, 44.4% year over year, then another 36%, and then in fiscal year 2026, another close to 30% growth year over year, which in my opinion is quite a return. Now, as you can see here on the graph, back here in 2021, we were closer to that $2,000 mark. Since then, the business itself, that's the most important part, the business itself has grown, generates more revenue, generates more profit, and yet the stock has become cheaper. This is what you want to see, buying a better business for less money. So that's stock number 1, of course. I've already talked about Mercadolibre plenty of times on this channel. If you want more information on that or a quick review of their earnings report, those videos will be on the channel or in the top right corner. Now, before going into the next ones, yes, there will be timestamps down below. I know you like it, so I will be adding those as well. If you enjoy this type of videos, leave it a thumbs up, subscribe if not. We're close to reaching 40,000 subscribers, so let's try and make it before 11th of May. It's when I turn 30, so it could be a great present. Again, thank you all for all the support, especially this year has been tremendous. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Stock number 2 is not a growth stock, it's not a tech stock, it's actually a dividend paying one. It's one that has been hit quite hard recently, and that's Starbucks. Starbucks now under $85 a share. As you can see here, RSI extremely low. Actually, well, it is oversold by quite a lot. If you look at the price right now, it's as low as when it was back in November of 2022. Then if we look at the forward PE, EV to EBITDA, price to sales ratio in the next 12 months, it is of course cheaper than the 5-year mean, now actually trading at a quite attractive valuation. It pays a dividend yield 2.68%, price to free cash flow in the last 12 months 21.9 times, price earnings to growth 1.29. So definitely, if you have a dividend paying portfolio or if you're looking to add dividend paying stocks, this should definitely be on that list, because I do still think that you're going to get growth plus dividends. If we look at the current average analyst price target, that sits at $105.7, representing close to 25% upside from the price we're at today. If we look at the dividend performance over the years, you can see that the annualized growth in the last 10 years, 16.69%. If you want something a bit closer in the last 3 years, let's say, still quite nice, 8.55%. So if you bought, let's say, one share of Starbucks 10 years ago, you would have been getting 13 cents. Today, you're getting 57 cents. And if we look at the shareholder yield, that sits at 4.56%. Why is that? Well, that's because they are also doing buybacks, which, as you can see right here, shares outstanding in the last 10 years have come down by close to 25%. Now, looking at what the analysts are expecting in the coming fiscal years, high single-digit growth with regards to sales year over year. Besides fiscal year 2024, that's 7.7% year-over-year growth. EPS growth around 15% for the coming fiscal years. Now, of course, with Starbucks, you might still see some weakness in the business, but at a certain point, it just becomes too cheap to ignore because of the buybacks, because of the dividend yield, and because of the brand, the strength of the brand. I do still think that people still like to drink coffee and still like to go at Starbucks. So yes, there is some, let's say, short-term pain, but I do think that that's also why the stock has been hit more recently. Up next, stock number 3 is a stock that I've been liking way more than before, and that's Adobe. We've talked about Adobe in the past. So Adobe is down big after reporting earnings and after the release of Sora. We've talked about that, how in my opinion that won't really impact the business that much, and I'll show you a picture in just a second. But currently the stock is at $474, way under the 200-day moving average. If we look at the last time we were trading at these prices, that would be June of 2023, so not so long ago. There is a small gap here. This is again on a daily, small gap here at around $440. If we look at RSI, it is very, very close to being oversold. I believe one extra red day and we are oversold. Then looking at valuation, now it became way more attractive than before. It is cheaper than the 5-year mean on a forward PE basis. Same with EV to EBITDA, price to sales, all in the next 12 months. Price to free cash flow is very close to its 5-year mean at 32.7 times. Price earnings to growth has come down quite heavily. It's now at 1.57. And this company has also been doing buybacks throughout the year. So in the last 10 years, shares outstanding have been reduced by 10.3%. And if we look at the average analyst price target right now, it still sits at $617, representing 30% upside from the price we're at today. Then looking at the analyst estimates for the coming fiscal years, sales growth of around 10 to 12% for the coming 3 fiscal years, including the current one, and then EPS growth of around 12 to 15% for the same coming fiscal years. And for those that think that AI will destroy Adobe, well, you just have to look at this picture. So Adobe Firefly, over 6.5 billion images generated since March of 2023. With regards to Adobe Photoshop, over 50% increase in average monthly social interaction following the public beta release of generative fill in Photoshop. Over 30% year-over-year increase in gross new Photoshop subscriptions. Of course, you don't know how many of those churn, but still quite impressive. Adobe Express, over 100% year-over-year growth in exports from Adobe Express, and over 40% mobile beta users who have used a Gen AI feature. And we've talked about Adobe. I went over the earnings report as well. You can find that out on the channel. The business is still doing very, very well. So I'm not worried that AI will destroy a business like Adobe. I think AI will help make Adobe's business much better, and especially much better for its users. Then lastly, stock number 4 is a stock that I've been looking at more recently. It's in the channel's portfolio, which we cover each and every week, and it shouldn't come as a surprise. That's Lululemon. Lululemon is now trading at $336. It's way, way oversold, has been oversold for a couple of days now. So just because you are in the oversold area doesn't mean that it cannot go lower. No, as we've seen, the same with overbought. You can be overbought for quite a while. But right now at $336, we're back at those prices not seen since May of 2023. And that means that we have filled that gap right there. Looking at valuation metrics for PE, EV to EBITDA, price to sales, much, much cheaper than the 5-year mean. Same with price to free cash flow. Price earnings to growth sits at 1.55. I mean, This company is now a $42 billion company, extremely high margin, especially for the business that they're in. There is a lot of pricing power as well. Over the last 5 years, the shares outstanding have been reduced by around 3%. If we look at the current average analyst price target, it still sits quite high at $470, representing close to 40% upside from the price we're at today. Of course, those can change pretty fast. And right now, if we look at the analyst estimates, you're getting top and bottom line growth of around 11 to 12% on average in the coming fiscal years. Now, Brad here in his weekly newsletter, I leave the link down in the description below. It's a free newsletter, very, very valuable. So there was here a bit of a report from Morgan Stanley. So they published the research this week on same-store traffic trends for Lulu stores. It covered 5 markets and measured traffic changes for Lulu stores where a nearby Alo store opening occurred. The takeaway is positive. 6 months before and after an Alo opening, Lulu's average store traffic actually accelerated by 2 points. How can this be? Basically, while Alo and Vuori continue to grow in popularity, so does athleisure as a percent of total apparel spent. So while these two brands are succeeding, this is in no way preventing Lululemon from finding more of its own success. Makes sense. Then Piper Sandler had a survey here, a teen survey for Lulu specifically. Overall, Lululemon maintained the number 3 spot in apparel, number 3 for women, and number 5 for men, but mindshare fell by a point year over year. Among upper income individuals for apparel, overall it gained 0.5 points of shares year over year with women and lost 0.35 with men. For athletic apparel, it stayed number 1 overall among affluent females and took a whopping 2.75 points of incremental share year over year. It's number 4 for affluent men and number 2 overall behind Nike. Alo rose to number 7 and Vuori reached number 10 for favorite athletic brands among affluent males. I still think that Lulu will be quite a success. It has, to be honest, I've been following this company for I first looked at this company in 2020 during the crash of 2020 at around $140, $130 or so, which in hindsight was bottom. I didn't know it. I talked with my cousin about it. We always laugh when we talk about Lululemon. But yeah, you live and you learn. It's really remarkable to see how fast they've grown the business and especially how profitable. I still think that they have a loyal customer base. They're growing it outside in China with men. So I think this is definitely a buy the dip or buy the crash opportunity. So those are the 4 companies: Mercadolibre, StarBucks, Adobe, Lululemon. Of course, there are plenty of other companies out there that are also in the oversold area. If you're buying any of those, do let me know down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.